I've been saying it for months. Most people investing in crypto have no clue what they're actually betting on. They stare at price charts, waiting for green candles, while missing the real story underneath, the tech. When Amazon cloud went down and half the internet crashed, social media, exchanges, even crypto networks like Ethereum, one question hit me hard. How decentralized are these systems really? That day, one network stood untouched. Hedera. No downtime, no panic, just pure efficiency. And it made me realize if this was a stress test for the future of finance, only one system passed. But the real question is, where does this lead to? If you're interested in this topic, hit the like button, subscribe, and type interested in the comments, and I will give you a heart. When Amazon cloud went dark, the entire internet seemed to hold its breath. One by one, the world's biggest platforms blinked out. Social media feeds froze, delivery apps failed, even online banking stumbled. For a few surreal hours, people were reminded how fragile the digital world really is. And right in the middle of that chaos, something extraordinary happened. While everyone scrambled to refresh error pages and restart servers, Hedera Hashgraph stayed up, not a flicker, not a delay, 100% operational. That was the moment the conversation about decentralization quietly changed forever. Because the truth is, most blockchains today rely on the very same centralized systems they claim to replace. According to Bitcoin.com news, nearly 27.5% of Ethereum's entire execution layer is hosted on Amazon Web Services. Let that sink in. Over a quarter of Ethereum's infrastructure depends on the same provider that just went down. So when AWS failed, so did the myth of total decentralization. And suddenly, all those trustless systems didn't look so trustless anymore. Hedera didn't just survive, it thrived under pressure. Its nodes are spread across multiple independent providers and global regions: Google Cloud, IBM, LG, Boeing, Dell, Standard Bank, each running its own validator. No single point of failure, no silent dependency hiding behind the marketing language of decentralization. And the irony? The outage that crippled half the industry became the ultimate advertisement for Hedera's resilience. While networks struggled to reboot, Hedera's dashboard calmly showed all systems operational. The foundation even posted, almost playfully, marked safe from the AWS outage. It wasn't arrogance, it was evidence. Evidence that a network built for efficiency, security, and scale doesn't just talk about reliability, it demonstrates it when the world falls apart. Because Hedera isn't built on hype or speculation. It's built on a synchronous Byzantine fault tolerance, the highest grade security model in distributed computing. It's the kind of tech that enterprises actually trust, the kind that governments, banks, and Fortune 500 companies can build real systems on without worrying that a single server failure will take everything down. Meanwhile, Ethereum's reliance on Amazon cloud raised uncomfortable questions. How can something truly be decentralized if one corporate outage can paralyze the network? That's the thought that kept echoing in my head. What else are we trusting that could vanish with one power surge? The more I looked, the more obvious it became. Hedera's architecture isn't just different, it's deliberate. Its council structure prevents any single entity from holding too much power. Its hosting is geographically and technically diversified. Its efficiency isn't just about speed, it's about endurance. And yet, here's the part that still gets me. Even after proving itself in real-world conditions, Hedera rarely makes the headlines. It doesn't scream for attention, it lets the numbers do the talking. While others debated downtime and recovery logs, Hedera quietly handled millions of transactions, carbon neutral, cost fixed, and fully verified. It's almost poetic. In an industry obsessed with noise, the network that stayed silent turned out to be the one actually working. So maybe the outage wasn't an accident at all. Maybe it was a forced glimpse into a future where the world finally separates marketing decentralization from mathematical decentralization. Because when the lights went out, we saw who had real power. Hedera didn't just stay online. It proved it's ready for a world that can't afford downtime. And if that doesn't make enterprises pay attention, nothing will. But here's the part that keeps me hooked. If one blackout could reveal this much weakness in the foundations of the crypto world, what happens next time? When it's not just the cloud that fails, but the financial system itself? Where does this lead to? After the AWS outage, something subtle but powerful started to happen. Enterprises began to look beyond the noise. They weren't chasing hype anymore, they were chasing reliability. Because when systems worth trillions hang in the balance, you can't afford a maybe. You need guarantees. And that's exactly what Hedera Hashgraph represents, a guarantee that the lights stay on no matter what. While the rest of the crypto market was caught debating decentralization theory, Hedera was quietly proving it in practice. Look at the data. Validators running across independent networks, global distribution across continents, and no over-reliance on any single provider like AWS. Compare that to Ethereum's 27.5% dependency on Amazon, and the difference is staggering. That's why, when everything went down, Hedera Foundation proudly posted all systems operational. No disruption, no downtime, just quiet confidence. That same confidence is now echoing into the institutional world. Hedera has just been listed in 6 US ETF filings, with names like Grayscale, Rex Shares, Osprey, and Crane Shares leading the charge. Even during a government shutdown that's delayed approvals, analysts are calling for a 60-80% chance of an HBAR ETF approval by Q4 this year. That's not speculation, that's preparation. The kind of preparation that tells Wall Street you're going to need this network whether you realize it yet or not. And here's what most people miss. Institutions don't jump on hype. They wait, they study, and they move only when the foundation is rock solid. Hedera has been building that foundation since 2018. It's not trying to be the loudest blockchain, it's trying to be the last one standing. And in moments like this, it shows. But let's talk about what's actually happening behind those ETF headlines. Real, measurable, unstoppable development. According to sentiment data, Hedera ranks second in real-world asset development activity, right behind Chainlink and above giants like Avalanche, Stellar, IOTA, and VeChain. In just the past 30 days, over 214 developer activities were recorded across Hedera's GitHub repositories. These aren't vanity metrics, this is raw builder energy. Code being pushed, smart contracts being refined, applications being tested for real-world deployment. And that brings us to something even bigger. DeFi on Hedera is heating up. According to Alan Crypto, Hedera's real-time transactions per second have surged over 32% this month alone. DeFi platforms like SaucerSwap and HeliSwap are gaining serious traction. SaucerSwap just announced its upcoming mobile app, a move that could bring thousands of new users into Hedera's ecosystem. Think about that. While other networks are still debating gas fees and congestion, Hedera is scaling quietly, fast, cheap, and sustainable. This is what institutional-grade blockchain looks like. Predictable performance, instant finality, low and fixed fees, zero front-running. And here's the irony. Everything Hedera's been criticized for, its governance model, its deliberate pace, its corporate partnerships, those are the exact reasons it's succeeding now. Because enterprises don't want chaos, they want control, they want predictability, and Hedera delivers both. Even developers are noticing the shift. Hackathons on Hedera have doubled in participation since 2023, with major projects being incubated directly through the Hedera Foundation's funding initiatives. The result? A growing network of decentralized apps, DeFi platforms, NFTs, and RYWA projects, all building atop a system that doesn't break under pressure. And yet what fascinates me most is how quietly it's all happening. Hedera isn't shouting about partnerships. It's not pumping coins with Twitter drama. It's building infrastructure. And the institutions, the same ones that dismissed crypto years ago, are beginning to take notes. The narrative is shifting fast. What started as an alternative blockchain is now becoming the blueprint for enterprise-grade decentralization. And this time, the validation isn't coming from influencers, it's coming from regulators, ETF filings, and Fortune 500 boardrooms. So maybe the AWS outage wasn't just an accident. Maybe it was a wake-up call, not just for developers, but for every institution searching for the next foundation of digital trust. Because if a cloud outage can paralyze markets, what happens when the next shock hits finance itself? The answer isn't Bitcoin, it isn't Ethereum. It's the network that stayed online when the rest went dark. The one built not for speculation, but for sustainability. And that's why Hedera isn't just surviving the bear market, it's rewriting the rules of who gets to define the future of finance. But here's the question that keeps me awake at night. If Hedera can prove this much resilience during chaos, what happens when the world finally notices? Where does this lead to? The question every serious investor should be asking right now isn't when will the next bull run happen, it's which networks will actually survive it. Because the truth is, hype fades, charts reset, and narratives collapse, but technology that works never stops compounding. And Hedera Hashgraph has just proved it again. When the Amazon cloud outage crippled half the internet, Ethereum's validators stalled, exchanges froze, and projects scrambled. But Hedera didn't blink. Its architecture, powered by asynchronous Byzantine fault tolerance, kept every node in sync across the world. That wasn't luck, that was design. That's why I keep saying this. Hedera isn't competing to be another blockchain, it's building to be the backbone of digital trust. You see, when enterprises decide where to build, they don't ask what's trending, they ask what's proven. And Hedera keeps proving itself. From Boeing to Google, from Standard Bank to IBM, from LG to Dell, every council member that runs a node represents a global institution with real-world stakes. These companies don't gamble on speculation, they build infrastructure that can't afford to fail. That's why when the market saw headlines about Hedera being added to 6 US ETF filings, it wasn't just another bullish rumor, it was a signal. Wall Street doesn't file ETF applications for fun. They do it because they see liquidity, regulation, and reliability aligning the trifecta that transforms a network from crypto to capital infrastructure. And Hedera is right there. Now think about what that means in context. We're talking about a network that stayed operational during an AWS blackout that's carbon negative, globally governed, and already powering enterprise DeFi and tokenized assets. That's not a coin, that's a system upgrade for the global economy. Even developers are feeling the shift. Hedera's recent surge in development activity, over 214 GitHub commits in just 30 days, shows that the builders are ahead of the speculators. They're not waiting for hype, they're already building the apps that institutions will use. Lending, DeFi, carbon tracking, NFT infrastructure, all of it powered by a ledger that costs fractions of a cent per transaction and never sleeps. And then there's DeFi, the sleeping giant on Hedera. Platforms like SaucerSwap and HeliSwap are laying the groundwork for an institutional-grade financial layer, fast, compliant, and free from the chaos that plagues other chains. Hedera's design eliminates front-running and gas wars completely. Imagine trading in DeFi without worrying about losing money to bots or paying $50.00 in fees. That's the kind of experience institutions will demand. That's what Hedera is quietly perfecting. But maybe the most powerful proof of all is this. During the time when other networks talk about being green, Hedera is green. Its energy efficiency isn't a feature, it's an identity. That matters when you're pitching to corporations bound by ESG standards. Every enterprise today is under pressure to decarbonize their tech stack. So when a blockchain comes along that's both secure and sustainable, it stops being a crypto store. It becomes a business decision. So here's where we are now. The lines between blockchain and business are blurring, the ETF filings are happening, developers are doubling down, transactions are surging, and institutions are finally asking the right question. Not is Hedera next, but how do we get on it? Because if one outage can expose the fragility of an entire industry, then one network staying online through it all becomes the obvious choice. The world is waking up to that, quietly, cautiously, but undeniably. And that brings us full circle. The outage wasn't just a glitch, it was a moment of truth, one that revealed what decentralization really means when the world goes dark. And as more systems migrate toward resilience, efficiency, and transparency, all roads begin to point toward one destination. Hedera. It's not the loudest, it's not the flashiest, but it's the one that keeps working when everything else breaks. And maybe, just maybe, that's the point. Because the future of finance won't be decided by who screams the loudest. It'll be decided by who stays online when the world goes offline. So ask yourself, when the next outage hits, when the next crash comes, and when the next system buckles, which network will still be running? Because that's not just a question of the next cycle, it's the question that defines the next decade. And if you've been paying attention, you already know the answer. But the real question is, where does this lead to